It's a Thursday morning. You're drinking your chai. Your kids are getting ready for school. Everything feels normal. Then your phone buzzes. It's an email or a letter notification from the IRS. The subject line says, Notice of Penalty, Unreported Foreign Financial Account. Your heart drops. You scroll down and you see a number that doesn't even feel real. Something like 16,000. You immediately think it has to be a mistake. You've never cheated anyone. You've never tried to hide money. You just had a small savings account back home. Maybe your mother's name was on it. Maybe it was an old joint account you forgot about. Maybe it was an account you kept just in case. You never thought America cared about a bank account in Pakistan, India, Nigeria, Mexico, or anywhere else, but America does care. And right now, that account, the one you forgot about, can create financial damage, and it can also spill into immigration consequences, delays, extra questioning, or problems when you apply for citizenship. Most immigrants in this situation do one of two things. They panic and do nothing, hoping it goes away. Or they panic and pay whatever the notice says without understanding their rights, sometimes paying more than they legally owe, or making admissions that hurt them later. You are not going to do either of those things, because in the next few minutes I'm going to give you the exact knowledge, the exact steps, and the exact wording you can use to respond safely, so you can protect your money and your future. This is Immigration Newsroom Hush. Let's break this down calmly, clearly, and step by step. Here's the trap, and why so many immigrants get caught. The IRS is counting on one thing, that nobody ever explained these rules to you in plain language. They're counting on your silence. They're counting on the fact that many hardworking immigrants assume their back-home account is private family business, that what happens in Pakistan stays in Pakistan. What you earn in India is between you and your family, that your old account in Lagos doesn't matter anymore, that your joint account with your parents is not yours. That assumption costs immigrants millions of dollars every year, and the trap has 3 layers. The first layer is the $10,000 misunderstanding. Most people hear $10,000 and they think, I don't have $10,000 in one account, so I'm safe. Wrong. The rule that triggers FBAR reporting is not about one account. It's about your combined total across all foreign accounts. And it's based on the highest total at any point during the year, even if it was only for one day. So if you had a savings account with $4,000, a checking account with $3,500, and another account or policy worth $3,000, that's $10,500 combined, even if it was only temporary. Even if by December the accounts were nearly empty. If the combined total went over $10,000 at any moment during the year, FBAR reporting is triggered. The second layer is, how would the IRS even know? In 2026, the IRS doesn't need to guess. Through FATCA, the Foreign Account Tax Compliance Act, and related global reporting systems, many foreign financial institutions report certain U.S.-connected account information to the U.S. government. That means your bank back home may be sharing information without you ever seeing it. So when people say, the IRS will never find out, that is outdated thinking. A safer mindset is, assume the IRS can eventually learn about foreign accounts and foreign income, and plan accordingly. The third layer is the immigration landmine, citizenship and good moral character. If you ever apply for U.S. citizenship on Form N-400, USCIS looks at whether you complied with tax obligations, if you were required to file a return and didn't, or if you had reporting obligations you ignored. It can become a good moral character issue. And here's the worst-case scenario. If you deny problems under oath and USCIS later finds evidence of non-compliance, it becomes a credibility problem, not just a paperwork issue. So the risk is not only financial, it can become an immigration problem. Now let's talk about the law, because once you understand the rules, you stop being scared and you start being strategic. There are 2 major reporting systems you need to know. The first is FBAR. FBAR stands for Foreign Bank Account Report. It's filed electronically through FinCEN, the Financial Crimes Enforcement Network, using FBAR FinCEN Form 1 or. The basic rule is, if the combined value of your foreign financial accounts exceeded $10,000 at any point during the year, you must file an FBAR. FBAR covers many types of accounts, including foreign bank accounts, savings, checking, joint accounts, accounts where you have signature authority even if the money isn't technically yours. Some foreign investment accounts, FBAR deadlines matter. It's generally due April 15th, and there is typically an automatic extension to October 15th. Now let's talk penalties, because this is where that $16,000 number comes from. For non-willful violations, meaning you didn't intentionally hide the account, the maximum penalty is adjusted for inflation and can be in the range of the mid-five figures per violation, depending on the year. For willful violations, meaning the government believes you intentionally hid it, the penalties can be much higher and can involve criminal exposure in extreme cases. But here is the most important practical point. Whether you qualify for reduced penalties often depends on whether you come forward voluntarily and correctly. Now, the second reporting requirement is Form 8938, which is part of FATCA reporting and is filed with your regular tax return, Form 1040, if you meet the thresholds. Form 8938 is not the same as FBAR. Many people need both. They are not substitutes. Form 8938 generally applies when you have higher levels of foreign financial assets, and the thresholds depend on filing status and whether you live in the U.S. or abroad. For many people living in the U.S., the starting thresholds are commonly single, $50,000 on the last day of the year, or $75,000 at any time during the year. Married filing jointly, $100,000 on the last day of the year, or $150,000 at any time. And Form 8938 can cover broader categories of foreign financial assets, not only bank accounts. Now add one more rule that immigrants often miss. If you are a U.S. tax resident, including many green card holders, the U.S. generally taxes worldwide income. That means interest earned abroad can be reportable, rental income abroad can be reportable, business income abroad can be reportable. The good news is the U.S. has tax treaties with many countries and offers foreign tax credits in many situations to reduce double taxation, but you must report correctly to claim those protections. Now let's move to what you need to do. Exactly, starting today. Step 1. List every foreign account and foreign financial asset connected to you. Tonight, not someday. Sit down and write a list of everything outside the U.S., including savings accounts, checking accounts, joint accounts, accounts where you can sign or access funds, foreign investment accounts, foreign insurance policies with cash value, if applicable. Don't argue with yourself about whether it counts. Put it on the list first. You can sort it with a professional afterward. Step 2. Do the $10,000 test properly. Look at the highest balances during the year and calculate the combined total at any moment. If it crossed $10,000 even one day, assume FBAR applies. Step 3. Check whether Form 8938 applies. Look at your total foreign financial assets and compare to the threshold for your filing status. If you're not sure, treat it as a serious question, not a guess. Step 4. Check whether you also failed to report foreign income. If your account earned interest, if you received rent, if you got distributions, those may need to be reported on your tax return. This is where you want a CPA or enrolled agent who understands international reporting. Step 5. If you are late, act fast, but don't act sloppy. If you missed FBAR or Form 8938 in prior years, do not ignore it, and do not half-fix it with random filings. There are IRS compliance options designed for people who made non-willful mistakes, such as streamlined filing compliance procedures in certain situations. Eligibility depends on facts, timing, and whether the IRS already contacted you. The key principle is simple. In many cases, coming forward correctly before you are under examination can greatly reduce penalties compared to waiting until you're caught. Step 6. If you're applying for citizenship, Form N-400, clean this up before you file. Don't walk into a citizenship process with unresolved tax and reporting issues. USCIS can ask for tax transcripts and may scrutinize compliance. It's not worth gambling your entire naturalization case. Now, you asked for exact words that could save you. Here is a safe script if you receive an IRS notice and you need time, without admitting things you don't fully understand. You can say, "I received your notice and I'm taking it seriously. I would like to understand exactly what year and what filing requirement you believe applies, and what documentation you need from me. If needed, I will respond through a qualified tax professional." If you call, also ask for the notice number, the tax year involved, the response deadline, where to send your response. Do not say, "I hid it." Do not guess. Do not invent explanations. Keep it factual, calm, and focused on understanding what the IRS is asserting. Now here are the 3 rules I want you to remember, because they can save you thousands and protect your future. 1. The $10,000 rule is combined, and it's based on the highest total at any moment during the year. 2. If you made a mistake, fixing it properly and early is usually safer than waiting for enforcement to escalate. 3. Foreign account reporting can become an immigration issue if you later apply for citizenship and your tax compliance is questioned. Let me say something clearly. Having a bank account back home does not make you a criminal. Sending money to your parents does not make you a criminal. Owning property back home does not make you a criminal. Not reporting when the law requires it. That's where the danger is. Most people who get hit with these penalties are not bad people. They're good people who were never taught the rules. Now you know the rules. Now you have a plan. If this video helped you, send it to one person you care about, one friend, one family member, one community chat, because this is exactly the kind of mistake immigrants make quietly until it blows up. Subscribe to Immigration Newsroom for weekly updates at the intersection of immigration, taxes, travel rules, and real-life compliance. Standard disclaimer: this is general information, not legal or tax advice. Foreign account reporting is complex and penalties can be serious. If you received a notice or you suspect you missed filings, consult a qualified tax professional experienced in international reporting, and consult an immigration attorney if you're applying for citizenship or have other status concerns.